We are here, we are here, we are here. On this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up EUR GBP. We are on the 12-month time frame. Price action, last candle to the right-hand side is a bearish red candle. Spike up to the high, still the same style of a doji. So it's consolidating. Price actions consolidating. That's working sideways within the second, third, fourth, fifth, sixth. Could be the primary seventh to last candle of the market. So that market's working its way sideways. Multiple spike ups to the high, which can drop that market down further unless that market is respected by the lower wicks from the opposite side and market work its way up. So that means price action will be identified as a retest, and we're looking for a bullish green candle to push that market up. Current price is sitting at 0.87808. So overall structure, price action pushes up to an overall structure of highs. You can tag the numbers of 0.95575. If price action drops down to overall lower structure, you can tag that numbers of 0.55112. We're also going to add the midpoint in the middle. We're going to create a zone for that. Now let's read the market to see what's going on with current prices at. Is it going up, down, or can it be identifying the drop down? If so, it'll be dropping down into that zone area, and that will be a retest of a pattern that's being formed. So let's head over to when the market started off. Let's take a quick look at what's going on. So we have green candles for the first candle of the market, and we can see the market pushed up. So if we had to draw out a pattern, you could think about it as being like a double bottom. So let's say we had imaginary red lines coming, dropping down from the zone to that first candle, which can create that first leg, second leg, third leg, fourth leg. So market went into that zone area, consolidated multiple times, created a pattern into that zone at the top of the zone, which pushed that market down to the bottom of the zone, which created another pattern that pushed that market up to the high, and which is price action could be matching up with the previous side where the mouse is at, which can drop that market down to another pattern. So the circles I just created, we're going to look into those circles, and we're going to identify those patterns that drop down to each level. So as I said before, market started with a double bottom, pushed up to the top of that zone. When that market pushed that market down was that double top. So you can see that first, second, third, fourth. So we have a double top. So basically market came back to retest that double top of that previous side, which is that double bottom. So double bottom, double top, market created another pattern that pushed up, and we can clearly see that is a head and shoulders pattern or a triple bottom. So let's go with it. We have a left shoulder, we have a head, and we have a right shoulder, and market pushed up. So we have a triple bottom or a double bottom and a retest, and the market spiked up back up to that previous of higher highs. And then if let's say if price action drops down, it's coming from the area of the consolidation last few candles in the market and that overall high of structure. So if so, let's say the market price drops down back down to the zone, it'll be coming from the overall first leg, second leg, third leg, and this is the consolidation of the third leg. So you're basically looking for the breakout to the top side or the bottom side. But if we receive that double top, market's coming back into that zone area, and it can push up and break out. And if so, it'll be creating a pattern that looks something like this for that first leg, second leg, waiting for the break. Market drops down for that third, and then push up and creates that double bottom, unless the market is respecting the levels of the high and the midpoint. And if you go into that area, let's say we grab that second level highs, and if market is respecting that second level highs in that area, and then say push up with the bullish green candle, will just be identifying as a first, second, third overall, and market push and break out. We're looking for the break of the zone, retest the zone to see if that market is going to push up from a double bottom and a retest. Unless a pattern is formed in this area, just like the opposite side, it can drop that market down, and it'll just be a huge structure of that first, second, third, and market comes back down for a huge double top instead of a short double top decline from these two areas, and it drops down. or that market can consolidate sideways, so we can continue to receive candles inside candles until that market is identified for the pattern, for the breakup, for the breakdown. Working our way to the 6-month time frame. So price action on the 6-month time frame is reading as a bearish red candle, spike up to the high. So still doji style price action inside the second last candle. So we're looking for the break. Let's say starting off, you look for the break of the body of the second last candle for price to break out. So this area could be identified as a retest. If so, is retesting the midpoint of the second last candle, which is forming that pattern. So when that market did came out that zone and spiked up to second level highs and came back to retest that second level highs, we can see that first, second, third, fourth. This will be the retest, price action towards the second last candle. Market pushes up with a bullish green candle coming from a double bottom and a retest or overall triple bottom. Walking to the 3-month time frame. So price action on a 3-month time frame is reading as a bearish red candle, doji. So the market is basically consolidating side by side within the previous candles of price, second, third, primary candle, like the fourth to last candle. Now we can look for the break out the bodies, which you can see that price broke out a little bit, came back to retest that body, or just hanging out the top side of that fourth to last candle, top of that body, for that market to push and break out. Or you can just look for the primary breakout of that overall huge candle to the long wick up to the top side, but still within the consolidation. Monthly time frame. So price action monthly time frame reading as a bullish green candle, doji style, spike up to the high with the price second, third, fourth, fifth to last candles in the market. So now price second, third, fourth, fifth to last candle in the market could be identified as an overall pattern. But if it drops down, you'll see that overall first, second, third, and market comes back down to that SR line that we created. And it can create some momentum to push up, break up, unless it breaks down and identify the break and retest, and it works its way back down further. But we do have identified the market may be dropping because we have multiple spikes up to this area here, and the previous price second, third, fourth, fifth, sixth, seventh, eighth, ninth candle in the market is a major spike up. So what this is reading with these two areas that we just identified is long spike up to the high, first leg, second leg, third leg, and then market drops down to fourth leg. So basically price second, third, fourth, fifth to last candle is retesting that long spike up to the high. Okay, so if you broke down the section of this long candle, it will be a high, a low, and near that midpoint area of that candle. So either the market is going to fully break out that midpoint, or as we can see, it's clearly retesting the bottom of that midpoint. It can work its way down. So it's retesting a level in here, which is second level lows within that area, which is creating that consolidation. Walking down to the weekly time frame. So price action weekly time frame, bullish green candle, spike up to the high, retesting the second last candle, top of that body. So basically overall consolidation. Now, if the market pushes up out of here, we'll see a pattern identify itself. But when that market did do a break and retest, we did receive that double bottom. So that double bottom price action area to the left-hand side, all these candles, is the retest of that double bottom. So we have that first, second, third, fourth. Overall retest, we're looking for that market to break out, come back down to the SR line, or work its way up further, or continue to consolidate. Daily time frame, price action daily time frame reading as a bearish red candle spike down to a low. So price action is basically retesting this area on this side here. So if it's respected and it follows up the bullish green candle, you'll see that first, second, third, and market pushes up. Where the market currently at right now is at a double top and retest. So we can see that first, second, third, fourth, retest, one push. So if it pushes and break down, follow with another bearish red candle, or this candle will push down further and fully break out. Grabbing the previous candle zone, previous candle, which will be wrap around that zone to the top side, so we can see as we walk down the time frame what happened when the market did break out of that zone. So we can see markets coming from that double top at the high, retest in this area here. Market broke through the zone, retest the zone again, and we can see if it's going to push down further. EUR, GBP.